we were at 17,866, and from there on, we've surpassed the 17,900 mark pretty comfortably. What this would mean for the next series and what should we be watching out for? Joining us on the show to discuss the same is Aditya Agarwal, Head of Research and Investments at InvestEd4Edu. Welcome to the show, Aditya, and a very good afternoon.
Hello, Hiral. Thanks for having the show. Good afternoon to you too as well.
Thank you. Aditya, my first question coming to you is, what is this last hour of trade rally actually indicating? Because this is the fourth consecutive session where we are seeing this kind of a phenomenon.
Actually, Hiral, to be honest, it was on cards. For the past few trading sessions, if you take a look at markets, they were consolidating. And after a good run-up, it is the phenomenon of the market to enter into a consolidation phase and then break out of that consolidation phase, narrow band that it was consolidating into, and resume its upward journey. So market has done that today, and usually you will find it's the expiry days when markets usually do these big surprise up move or the down moves. So today it was an up move wherein markets broke out of that narrow consolidation phase, and markets are comfortably sitting above that consolidation. So my sense is markets should head higher in the next expiry as well, and 18,000, 18,100 could easily be done on the Nifty, and Bank Nifty is something which is chugging along quite comfortably. So I believe both Nifty and Bank Nifty has more legs on the upside and easily should scale 1 to 2% from current levels, if not more. Especially on the banking space, you will find a lot of these undervalued, under-owned small PSU stocks and private sector banks, which were due for a rally. They are now outperforming, and that is likely to continue.
Right. So, Aditya, when you say in terms of Nifty as well that the upside is here to stay, what's the next, immediate resistance? Do you think 18,000 would be a psychological resistance as well as a technical resistance for the Nifty?
Here, to be honest, 18,000 is not that great a resistance. You can talk about it as a psychological level. Yes, 18,000 will act as a psychological hurdle. But I believe, again, it will be a matter of time before we scale beyond 18,000 and head to levels of 18,100. That is where the actual resistances lie for me. So 18,100 is something I'm eyeing very closely on the upside. On the downside now, any intraday dip or maybe a morning gap down open closer to about 17,800, 17,750 will be a good buying opportunity, and look for long positions rather than going short on the market, because I believe the undertone of the market is very strong. And if you look at the advanced decline ratios as well, all are going very good for the markets, be the mid-cap space or the banking space, as I mentioned. Look at the mid-cap IT stocks. They were outperforming in trade today. So I believe the undertone of the market is very strong, and any intraday dip or maybe a gap down open in the morning will be a good opportunity to go long, at least for a target of 18,100 to start with.
Right. Aditya, coming to Bank Nifty as well, as you just mentioned, that's where you're seeing strength right now, correct? And clearly there is notable strength in terms of Bank Nifty as compared to Nifty 50. From here on, what are the levels are you watching out for? Because we've already crossed the 43,000 mark in terms of Bank Nifty in today's session.
So here, to be honest, I believe Bank Nifty per se could stall a bit. Maybe 43,200, 43,300 is where I'm looking at on the Bank Nifty. But the ones which don't have too much of weightage on Bank Nifty, those could be the ones which could outperform going ahead. As I mentioned, could be the small PSU banks and the private sector banks, which are little less owned. Names like CSB Bank, names like a Federal Bank, all these stocks are looking extremely positive on the charts, and bring in a Bank of Baroda along with it. I believe all these stocks are looking very good on charts.
Right. Now, coming to individual counters as well, last 2 to 3 sessions, in fact, we've seen a good rally that has come in terms of the PSU Bank Index. It stayed above those 4,000 levels already. What are the stocks do you think should be contributing to it from here on, which could be good buying opportunities as well?
So from the PSU space, Cyril, I believe Bank of Baroda is something which definitely stands out. I can add a PNB bank to it. Not to forget, SBI will be the leader of the pack. But yes, having said that, I believe there's more room on the upside as far as Bank of Baroda, PNB, and Canara Bank are concerned. These are the three PSU banking stocks I will closely monitor for this expiry, and I believe there is decent upside still left in all these three stocks.
Okay. Coming from there on, if you look at the mid-cap IT names as well, as you've mentioned, in fact, post TCS as well as Infosys earnings, we've seen good up moves and surges that have come in terms of, mid-cap IT names. What is the derivative data as well as the charts indicating, and where would you place your bets?
Oh, absolutely. In fact, if you take a look at the move in the IT stocks in the previous few months as well, it was the mid cap IT space which were doing well, not the large cap stocks. They have been underperforming for some time. And if I have to look at any IT stock from the mid cap space, the top of the list will be a Persistent, followed by a Coforge, and then you have the names of LTTS, LTI. All these stocks are looking very good on the charts, mind you. In fact, something a beaten down stock like Birla Soft can also be looked at current levels, offers a good risk to reward ratio. I believe all these stocks should be on one's radar, especially the mid cap space. The names which I mentioned, Persistent, LTDS, LTIM, Coforge. Look at all these stocks, Birla Soft, and add them on the portfolio. At least add them on the watch list, I would say, and monitor them closely, because I believe there is decent upside still left in all these stocks. If not 10%, I believe at least 5 to 7% is easily doable on any given day.
Right. Apart from that, let's look at the Godrej properties in today's session. That counter is seeing a short build-up as well, and clearly there are bearish positions that are being taken on the counter. What would your advice be specifically to a Godrej properties?
So here I believe in Godrej properties, there is more room on the upside. In fact, if I take a look at all the real estate stocks, all of them are doing well. If there is a short build up, I believe there could be a possibility of a short squeeze here. So I wouldn't recommend people or our viewers to go short on Godrej properties, for that matter, on any of the real estate stocks. Take a look at DLF, a beautiful build up there. Take a look at Godrej properties, looking very good on charts. I believe from current levels, if one can initiate fresh long positions with the stop loss closer to about 1250, 1270, easily one can look at a target of 1400 and beyond. So these real estate stocks are definitely looking very strong on charts, and one should have them on the portfolio, not go for short but long positions either.
Right. Moving to the FMCG space, you have an ITC, positive territory, good OI built up seen. Apart from that, you have HUL also, which reported numbers, Nestle, as well as if you see Godrej Consumers. What is the pack indicating specifically from a derivative OI perspective? And do you think good bets that someone should look at from a Friday trade?
Check the derivative data here in these stocks on an individual basis. But if I take a look at all these stocks technically, I believe it's a hand pick of stocks within the FMCG space. Like in the mid cap IT space, you can pick up anything. That's not the case with FMCG. There are a bunch of stocks which are doing well for themselves. There are a few stocks which are not doing terribly bad for themselves. HUL is one of them, which is correcting big time post numbers, and prior to numbers also, they were not looking all that great on the charts as well. So I believe if I look at the derivative data, the OI will also suggest the same, that there's a good short build up in HUL. So that is something I would continuously avoid going long. Rather, if somebody is looking to go short, one can do so. On the flip side, if I take a look at Dabur or maybe a Nestle, and you mentioned ITC, not to forget, it is trading at a fresh 52-week high today. So all these stocks are looking very good on the charts. So Nestle and ITC will be the top bets within the FMCG space, and I believe Nestle certainly has more 5 to 6% room on the upside, while ITC at current levels is little skewed in not in favor of going long, purely because of the fact that it is sitting on extremely good gains. So on the upside, maybe closer to about 20, 30, 520, 525 is where somebody can look to book profits.
Right. So a lot of movers and shakers in trade today, a lot of stocks that could continue to rally from here on as well. Thank you, Aditya, so much for joining us on the show and sharing those views with us. But clearly, a good day of trade, a good expiry, at least in terms of the session today. And as we've seen, last 4 trading sessions, that last hour of trade has been absolutely interesting for the investors. That's all that we have in the session. Thanks for watching.